Welcome to a new series which is called Liquidity Mapping. Today we're gonna start with Palantir, the one to rule them all. Let's go. I like this company from a chart perspective. I like this company from a fundamental perspective. I don't really like the company from an ethical perspective. I don't really like how they are tied to a certain elite and how they perceive the world.
Even if you're evil, you're at least not bad. You're not incompetent.
But in reality, I cannot change where the world is heading, and I'm quite sure Palantir has me in their data bank, and so I want to get something of that as well. So let's have a look at the chart here. Palantir was listed in 2020, surprise, surprise. We had an incredible start here with a 400% performance into 2021. So they gained a lot of traction of this liquidity injection. Then they corrected a lot into 2023, even below the initial price. And from there on, a spectacular run of 3000% made a lot of people a fortune. Now, we have a head and shoulders pattern here. We already corrected 35%, which makes the stock seem cheap to many most likely, but I trade structure and it's still in higher time frame premium up here. So according to my strategy, this is not a buy, and we might bounce from here. We might go all the way back up here, but this is not how I trade and this is not how I want to invest in this company. I'm waiting for higher time frame discounts, and those higher time frame discounts, they start below the 0.5, which also aligns with the $100 key level, which is a key level because retail is going to look at this round number and they're gonna say, oh, we lost 100K, this is super bearish, which then creates selling. And for that reason alone, the $100 level is a key level, even though technically it doesn't mean anything besides that. So once we are below the 0.5, we are in discount. How should we approach this whole idea? How should we enter? Very simple. Once we are below the 0.5, we can start to scale in. We can try to better our average. And the deeper we go into the level, the bigger the buys should be. So I, for example, start buying here because the $100 key level could also get front run, right? I'm not able to look into the future. And so I position myself for every possible outcome, which is also a potential front run of this whole area. And that's why I want to start scaling in here with small chunks. And the deeper we go, the bigger my buys are going to be, which then brings my average best case somewhere down here with a clear invalidation below this low. You see the stop loss below this low would still be pretty wide, 25%. But we talk about a higher time frame buy here, a higher time frame investment. And if my average is somewhere in this area, it's still a nice risk to reward, right? So if you pull a trade box, stop below this low, targeting those highs, it's still a very nice trade idea, just trading this range. But I'm not just buying this because I want to trade the range. I think Palantir has a incredible future. Looking at the macro stuff, I'm gonna dive into this in a few minutes, but let's finish the technical analysis because it's the most important part. And I'm buying this with a clear validation with a stop below this low. And should this level be lost, should I be wrong on this idea, I pay a very defined amount. And then if we go down here, I'm gonna be a buyer once again. So that said, I want to see this level lost with a close below. Otherwise, a higher time frame weekly, 2 weekly closes below, this would invalidate my idea. So I leave room for this soft stop. And should we go down into this area, my position will be even bigger, simply because the range trade alone would already be an insane performance. Plus, I think this is a generational entry and price will not stay long down there because it's gonna be scooped up by smart money, quite aggressive. So we maybe even dip down here and my upper position is not even stopped and I just scale in lower because there was no close below this structural low here. As said, I'm trading always the range first. So if we go back up here, I'm gonna be TPing for sure. My risk is going to be removed. I'm not speculating on anything higher than that until proven otherwise. But secondary, I have a macro thesis. If it's going to be what they say it's going to be, it's going to be going way higher than that, because it's going to be the most powerful private company on earth, most likely, because they are not building for short-term revenue, they are building for long-term power. They are connecting themselves into governments, into secret service agencies, into militaries all over the globe. They also started venturing into the business sector, which brings in more money. Obviously, the private sector is also more lucrative than those government contracts. But those government contracts, they are not just for short-term revenue, they are power. Because if you control the system, the information flow with your AI technology of governments, militaries and all that, you have all the most powerful data of the world. Your system is running the world in the background. And this is what Palantir is working for and heading for. They don't care as much about short-term revenue as private companies often do. They are aiming for power. For this reason, Palantir is highly speculative and the valuations is way above its profitability. So it's not like your super established big company that is really already creating consistent revenue. Palantir is highly volatile, Palantir is highly speculative, and so make sure you know what you trade. The whole valuations are way too high. If you look at, for example, the PE ratio, it's way above everything that is considered logical. But as we know, the market is developing, evolving, and it's not only the most logical, the most statistical thing, it's simply somebody pushing price higher because he expects something from this company. For this reason, risk should be managed better. Positions should be built with more brain. It's not a no-brainer where you say, okay, good, it's gonna have a great future for sure. There are many variables that need to fall into place that everything plays out. And for this reason, we also TP at the range high as usual. And talking about the PE ratio, how mad the world is going nowadays. For example, if you talk to old school investors, which traded PE ratios and all those things, many of those things don't make sense anymore, especially since 2020. Valuations are going crazy because there's so much money flowing in the system. So from a fundamental perspective, they are way higher valuated than they are profitable. This is because of future expectations, and this is also because of buying, because somebody is pushing price higher, not just because he thinks this stock is worth so much, but also because he wants people to think that this stock is worth so much. So keep that in mind. The market is evolving, the market is changing, and I think we are going to see a new era and a new elite taking over. And this elite seems to be somewhat very tied to Palantir and to other technology companies. That's why I like Palantir from a fundamental reason. But as usual, guys, charts and TA above all, the fundamental thesis just backs up the TA thesis, not the other way around. So, and that's it with the first video of liquidity mapping. Palantir, the one to rule them all. Have a great week, guys. Bye.